Hi, my name's Lydia DeLeo, and I'm here with Ryan Skaggs with Guaranteed Rate Affinity. He's an AVP here and is a local lending officer and does quite a bit of business as far as in the area. And in light of this current low interest rate environment, I thought it would be timely to have a conversation, a dialogue. And Ryan, can you just expound a little bit in terms of where interest rates are and kind of the benefit?
Absolutely. We've really seen a drop in interest rates over the last few quarters. We've approached the lowest interest rates that we've seen probably in your lifetime. We saw the lowest rates in 2013. Freddie Mac put it down around the 3.35 range on the 30-year fixed, and we're approaching that 3.5 range on the 30-year fixed. So we are within 20 basis points or so of an all-time low. So we're not quite there, back down to that time, but if you think back of like from 2010 to 2013, like there was a lot of negativity in the market, and we were just kind of coming off that rebound. I feel like the market's doing a lot better now. And the fact that we have these low interest rate is a gift. I mean, the affordability on homes in the North Shore with these low interest rates is exciting, I think, no matter where you sit.
So it's a great time to certainly consider being a buyer, right?
Oh, for
or
sure.
potentially refinancing as far as on your mortgage. So let me ask you, there's kind of this rule of thumb, right? As far as for every 100 basis points or 1% in terms of how we view a rate. What's the impact again around?
So you look at it from a refinance standpoint or a purchase standpoint. So on the purchase side of things, I've been sending out to my clients just to educate them on how that looks. If interest rates drop by 0.25% in a day, and that's actually happened a few times where they've literally dropped in a day, which is kind of scary that we have that much volatility in the market, let's be honest. But with that said, interest rates drop in a day. If you have $1 million loan, the next day you could pay $30,000 more because of that quarter rate drop. So that means $1 million loan the next day could be $1.03 million and you could have the same amount. Or you could take the benefit and say, oh my gosh, my payment got that much cheaper, right? For a refinance side of things, the higher the loan amount, the less movement you need to really find savings. So I've got a ton of clients right now that are going through refinances that have maybe a $750,000 loan or higher, that 0.25% in interest rate drop is hugely significant. I mean, that could be $500 a month.
Or over time, what you can really,
the interest
really
rate
save,
savings over time is just staggering. I mean, that can put kids through college. Well, we hope so, right? But whatever that number is at that point, we'll see.
I'm at that point right now. So yeah. So as far as then kind of this trend, because in the beginning of the year we were thinking that rates were going to be going up, right? And now rates have steadily been going down. Any thoughts as far as what you're hearing as far as from market pundits in terms of rates?
For sure. So we've definitely, we've heard from the Fed. The Fed has been very out in front of telling us what they're going to do next. They've signaled every single thing that they do. This Fed, this chairman, Powell, has continually just said, hey, this is what we're going to do, market, and expect us to do it then, in so many words, right? So we'll definitely see another rate cut later this year, in my mind. That's where, if you're a betting person, that's where you'd be putting it. But that doesn't necessarily mean the 30-year fix drops. Because they drop the Fed funds rate, they're not dropping a 30-year fix.
And this is a big one, right? Because I think a lot of people don't understand
that. A really common misconception is, so if you think about it from like a economics 101, and you go back to school and you say, okay, when the Fed decreases the Fed funds rate or decreases their rate, what is supposed to happen? That is supposed to kick the economy in the rear, and it's supposed to start going higher. So if the equity market starts to go higher, then the bond market should go lower. People will take money out of those safe, secure bonds or mortgage-backed securities and things like that, and go put it into Apple and Facebook and technology stocks and the Dow and the NASDAQ and whatever else. So that should actually make interest rates rise, not fall. So if that Fed rate cut actually helps the economy continue to grow, we'll see interest rates go up, not down.
Interesting. So kind of what you're saying then now is might be a really good time to capitalize on the lower rates because they may not stay.
I see 2019 as really, kind of continuing, in the lower interest rate market. But definitely if these different things, continue to push us up, like we're going to really see interest rates continue to kind of crawl back up, just as we saw them crawl back down over the last few quarters.
Wow.
So.
I mean, I could continue this conversation.
Oh, and so could I.
It's so fascinating. But with that being said, so somebody is looking as far as to refinance or potentially thinking about buying, and they really want to find out because it's so key to get pre-qualified.
Yes, so true.
How can they find you?
Yeah, so you can drop me an email or give me a call, and we'll put contact info in the details below. But I serve the North Shore, Chicagoland, all of Illinois, technically, and Indiana. So, focus my business in the North Shore, and would really love the opportunity. So thank you for having me.
Absolutely. Again, Ryan Skaggs with Guaranteed Rate Affinity. And I tell you, he's worked with a number of our clients, and I think he's really, really good. And thanks again, guys, for watching, and look forward to having you come and see our next video in terms of focusing on some of the local businesses here in the community.